Welcome back to the Deep Dive.
Good to be here.
Today, we're really zeroing in on AXT Inc, their Q2 2025 earnings call.
Yeah, this was fascinating.
It really is, because you see this company right at the forefront of, cutting edge tech.
Mm-hmm.
But they're smack bang in the middle of these really complex global geopolitical issues.
It's the perfect storm almost.
Yeah.
Huge demand meeting these, significant roadblocks.
Exactly. So our mission for you listening in is to unpack how AXT is trying to handle these big export controls.
Right.
While also trying to capitalize on this huge wave of demand, especially from things like AI.
Let's dive in. Where do we start the numbers?
Yeah, let's start with the headline numbers. It kind of set the stage.
Okay.
So AXT reported Q2 2025 revenue of $18.0 million.
Right.
Now, on the surface, you hear a 35% drop year over year from Q2 2024, and, well, that sounds alarming, doesn't it?
It does, a big drop. But, and this is the interesting part, it actually nudged slightly above their own revised preliminary expectations. So they kind of knew things were tough, but maybe did slightly better than feared.
Okay, so a bit of nuance there on the revenue. What about the bottom line, profitability?
Well, they posted a non-GAAP net loss of 17 cents per share. And that did miss the consensus estimates, so not great on that front.
Okay.
But, and this is a really important but, I think.
Go on.
The gross margin showed a really significant sequential improvement. Jumped up to 8.0% GAAP, 8.2% non-GAAP.
Wow. Okay. From negative margins in Q1, that's quite a swing.
It's a huge turnaround. Yeah, exactly. From negative territory in Q1. It really suggests they're, getting a grip on operations, cost, efficiency, even with all the external pressure.
That margin recovery feels key. Now, the market reaction initially, it was concern, right?
Yeah.
Stock price reflected some worry.
Oh, absolutely. Immediate concern. You saw the stock dip. Investors were clearly apprehensive about those headwinds, the permits.
But if you've been tracking it since the call.
Right. That's the fascinating bit. In the weeks, months since, the stock has actually rallied quite significantly.
So what does that tell you? Initial skepticism may be giving way.
I think so. It looks like that initial uh-oh reaction shifted towards something more like, okay, the headwinds are real, but look at the underlying demand. Look at their position.
Yeah.
A more, let's say, cautiously constructive view is taking hold.
It shows how quickly sentiment can shift, right? Once people dig past the headline.
Exactly. See the short-term reaction, but then the fundamentals, the long-term story in areas like AI start to get factored back in.
Okay, let's dig into those headwinds then. This permit predicament, as management called it.
Yeah, this is central.
So for context, China put export controls on gallium and germanium back in August 23.
Mm-hmm.
And then, crucially for AXT, they added indium-related stuff, including indium phosphide substrates, that's N and P, in February 2025.
And the core issue, the real headache, is that every single order going out of China now needs an export permit.
Every single one. Ouch. And that directly hit Q2.
Directly. Management was clear. Longer processing times for gallium arsenide or GaAs. Permits really held back Q2 revenue.
How much are we talking?
They estimated it accounted for roughly half of the revenue shortfall in the quarter. Just GaAs permit delays.
Wow. Okay, so that's a major bottleneck. Was there any good news on the indium phosphide permit front, or was that stuck too?
There was some movement, thankfully. They did get their first NAP export permit late in June.
Okay.
That allowed about $6.7 million in shipments outside China. And they got more NP permits in July, too. So
Okay.
The taps are starting to drip, albeit slowly.
Okay, dripping. But what's the scale of the demand still waiting behind that valve? Is the backlog significant?
Oh, it's huge. They're holding a backlog right now of over $10 million in combined GaAs and NP orders, just waiting for permits.
10 million plus. And how much of that is the high demand NP?
More than half. Over 50% of that backlog is indium phosphide. Just screams underlying demand, doesn't it?
It really does. And I suppose with that kind of uncertainty hanging over them, it absolutely makes sense why management's Q3 guidance is cautious.
Totally. They're only forecasting revenue for Q3 based on permits they already have in hand.
Right. Which, that leaves a lot of potential upside if those permits start flowing faster, doesn't it?
Massive potential upside. It's not a demand problem they're forecasting. It's purely a reflection of the regulatory friction. The permits are everything right now.
Okay, so permits are the bottleneck. But let's talk about the demand itself, especially for INP. Is it strong enough to kind of push through this noise?
Well, this is where the story gets really interesting. Despite all the permit headaches, AXT specifically called out healthy growth in AI-related demand for indium phosphide in China.
Ah, so within China where the permits aren't needed for domestic sales.
Exactly. Sales for AI applications using their NNP inside China nearly doubled in Q2 compared to Q1.
Doubled. Wow. That's a powerful signal.
It really is. It shows the underlying pull from AI is immense.
And what's driving that specific AI demand for NNP? Is it a particular tech shift?
Yeah, it's fundamental. AI data centers are upgrading their optical interconnects like crazy, moving from 800 gigabits per second up to 1.6 terabits, and even looking beyond that.
Okay.
And those higher speeds absolutely require better quality indium phosphide substrates, specifically ones with very low defect density, what they call low EPD etch pit density.
And AXT is positioned well for that specific need.
That's their strength. They believe they're one of the top 2 suppliers globally for this high-quality NMP.
Top 2. What kind of market share are they claiming?
They estimate they hold at least 40% of the worldwide supply.
40%. That's significant.
It is. And what's maybe even more telling is they believe the market, especially driven by AI, is growing so fast that the 2 main players, including themselves, can barely keep up.
So a potential scarcity situation even without the permit issues.
That's the implication, yeah. Once things normalize, if they normalize, the demand could really outstrip supply.
And is China's own push for domestic tech helping AXT here too?
It seems to be. China's trying to build up its own sources for components like EMLs, that's electro-absorption modulated lasers, and silicon photonics lasers.
Right.
That whole effort further boosts the internal demand for ENP within China. So looking ahead to Q3, AXT actually expects their total NNP revenue to grow by 30% or more.
30% or more growth for AMP in Q3, even with the export permit issues ongoing.
Yeah, underscores just how strong that AI pull is.
Okay, so it's this constant push-pull, the geopolitical friction versus this powerful tech tailwind from AI, particularly for ANP.
That's the core dynamic right there.
Given the revenue pressure, how are they doing managing the things they can control, like operations, finances?
That's where we saw that positive gross margin story. That big sequential jump wasn't an accident.
Right, you mentioned that earlier. What drove it?
Management pointed to a really strong focus on their manufacturing processes, efficiency gains. And critically, they managed to resolve some previous yield issues they had with gallium arsenide for a specific wireless HPT high-power transistor customer.
Ah, okay. So fixing that problem helped margins.
Definitely. It allowed them to sort of carefully restart business with that client, which provided a nice boost.
And beyond margins, what about things like spending, inventory, keeping things tight?
Looks like it. Non-GAAP operating expenses were down $7.6 million from $8.5 million in Q1. So good control there.
Yeah.
Inventory is still pretty sizable, $80.1 million, but it did tick down slightly by about $300K. And they said they're focused on getting that number down further.
And cash.
Cash and equivalents dipped by about $3.1 million during the quarter, landing at $35.1 million at the end of June. So, managing cash carefully in this environment.
Makes sense. Now, NMP and GaAs get most of the attention, but what about their other businesses, like germanium?
Yeah, germanium actually saw some revenue growth in Q2.
Oh, really? Where from?
Mostly from satellite solar cell applications within China.
Okay.
But it's a very price-sensitive market, and they still face those permit issues for any sales outside China. So it's a bit challenging. In fact, for Q3, they're guiding for germanium revenue to actually decrease.
Okay, so mixed picture there. And the raw material side. And what's the latest on that Tongmei IPO plan that's been talked about for a while?
Right. Consolidated raw material revenue was down sequentially. They cited, broader economic factors and also some changes in their service model mix. Pricing seems stable globally, though.
And Tongmei.
The Tongmei IPO application, that's their subsidiary they want to list on Shanghai's Star Market, kind of like China's Nasdaq Q.
Yeah.
That's still in process, still moving forward, apparently. And despite the whole geopolitical climate, it's still seen as a pretty strong IPO candidate within China. If that happens, it could unlock quite a bit of value for AXT shareholders.
Definitely one to watch. Okay, so pulling all these threads together, the permits, the strong AI demand, the operational focus, what's AXT's outlook, their guidance for Q3?
Well, for Q3 revenue, they're projecting a range of $19.0 million to $21.0 million.
Okay, so that implies sequential growth from Q2's $18 million. That's positive.
It is. And remember, as we said, the guidance only includes revenue from permits they already have. Super conservative.
Right. The potential upside is still there if more permits land. What about margins and the bottom line? for Q3?
They expect gross margins to keep improving, getting into the low to mid-teens range.
Continuing that recovery trend. Good.
Yeah. And the non-GAAP net loss is expected to narrow again, forecasted between 11 cents and 13 cents per share. So definitely seeing sequential improvement across the board in the forecast.
And if we break that Q3 forecast down by segment, where's the growth expected? Where's the pressure?
It follows the trends we've discussed. In NP revenue is expected to be the star, growing 30% or more.
Wow.
The wireless GaAs business in China is also expected to see continued growth.
Okay.
But as mentioned, germanium revenue is projected to decline, and raw materials are expected to be roughly flat.
So it really hammers home that NN key for AI is the engine right now, isn't it?
Absolutely. It's powering through, even with all the external constraints.
So stepping back, for you, the listener trying to make sense of this, AXT's Q2 really highlights this tug of war, right?
Perfectly put. It's strong fundamental tech demand, especially AI-driven ENP.
Versus the very real, tangible friction from these geopolitical export controls.
It makes for such a compelling and complex investment narrative.
We saw that play out in the market reaction, too, that initial dip.
Yeah, driven by understandable skepticism. Investors wondering, can they actually get these permits? Can they convert that huge backlog into real sales?
But then the rally since.
Exactly. It shows the market, or at least parts of it, looking past the immediate friction and recognizing, okay, the underlying demand here is powerful and AXT is really well positioned in critical growth areas. That cautiously constructive view seems to be gaining ground.
So if you're watching AXT now, what are the key things, the catalysts that could really change the story or accelerate things? What should you keep an eye on?
Number one, without a doubt, is the pace of permit approvals. How quickly can they convert that $10 million plus backlog into shipped product and revenue? Any sign of acceleration there is huge.
Okay, permits first. What else?
Second, any real news or clarity on the Tongmei IPO on the STAR market that could be a significant value unlock.
Right.
Third, just continued evidence of that booming demand from the AI data center upgrades the 1.6T, the 3.2T transitions. That directly fuels NNP demand long-term.
Makes sense.
And finally, any change in policy. If China eases the controls or tightens them further, either way, policy shifts would have a massive impact on AXT's volumes and margins. It's a big wild card.
Policy is definitely the elephant in the room here. Okay, let's shift gears slightly. It's time for our This Is Not Financial Advice segment.
Ah, yes, the fun part.
Where we brainstorm a potentially outrageous but maybe plausible trade idea based on what we've discussed.
Okay, let's hear it.
So, given this unique situation, massive backlog, clearly bottlenecked by permits, but undeniable AI demand underneath, there's this idea of a permit resolution trade. Something specifically betting on that bottleneck clearing faster than expected.
Okay, I see where you're going. Management's Q3 guidance is super conservative, right?
Right.
Only includes secured permits.
Exactly. So that leaves significant room for an upside surprise if permits flow faster.
So the idea, maybe something like short-dated, slightly out-of-the-money call options.
That's the thought. The logic is if there's an unexpected acceleration, maybe a big batch of permits gets approved all at once, faster than anyone thinks.
That could be a really powerful catalyst, right?
Potentially, yeah. It could cause a rapid rereading of the stock. We've already seen the stock rally on improving sentiment.
Right. The market seems willing to reward good news here.
So an unexpected flood of permits, that could trigger a really sharp, quick pop. You're basically making a leveraged bet on that geopolitical valve loosening unexpectedly.
It's definitely speculative. You're betting on a specific, unpredictable event. But the potential leverage, given the pent-up demand, is clear. High risk, potentially high reward if that specific catalyst hits.
Absolutely. It's bold. And for you listening, extremely important to remember this is not financial advice part. This is high risk, high volatility territory. Do your own research.
Always. It's an intriguing setup, but the risks are just as real as the potential upside.
So wrapping up, AXT Inc. It's just a really nuanced, captivating story, isn't it?
It really is. You've got this company with clear tech advantages, products in super high demand for critical things like AI.
But they're trying to operate within this incredibly complex, shifting maze of global trade rules and geopolitics.
That tension, innovation versus friction, it's not just about AXT. It's a huge theme across the global economy right now.
And that really leads to the bigger question we want to leave you with today, beyond just this one company.
Yeah, how are other tech companies, other manufacturers going to navigate this?
Yeah.
How do you innovate and deliver when the rules of the game, the supply chains, can change so quickly based on geopolitics?
What does it mean for high-tech manufacturing, especially for these foundational technologies that are becoming increasingly, well, sensitive points of national interest?
Lots to think about there. The landscape is definitely changing.
It certainly is. As always, please remember, this discussion was for informational purposes only. It is absolutely not financial advice.
Please do your own thorough research before making any investment decisions.
Thanks for diving deep with us here on Talk Tickers.
We'll catch you on the next one.